Hello everyone and welcome to Pearls of Fisdom with Nirmal Bang. I'm Avan Dabash. As we step into Samvat 2081, what's in store for the markets? Will we see the FIIs continuing to take a backseat and the DIIs dominating? Is the private Capex and the macro picture looking promising? And more importantly, how can you light up your portfolio and which are the top sectors to watch out for? Let's find out, and joining me is a very special guest. Mr. A. Balasubramanian is the Managing Director and CEO at Aditya Birla Sun Life AMC. Thank you so very much for taking time out. Wishing you a very happy Diwali and a prosperous year ahead. And is it going to be prosperous when it comes to the Indian economy, I wonder? Given that we are seeing a private Capex pick up, are you optimistic on the Indian economy?
I think, and first of all, thanks for having me part of the discussion today. The way I see is, I think India's Capex, especially if you look at the gross capital formation, which is a measure in which you take, it's been going up each year, and this year too, the significant amount which is being allocated towards the public infrastructure spending, which is close to about 12 lakh crore, which Capex the government has budgeted this year, which will go towards building various infrastructure needs in the country. And second, we have seen a significant pickup in the private sector Capex in the last few years, especially taking into account various manufacturing sectors, including the semiconductor business as well as electronic manufacturing, which has now been considered in India more aggressively in the last few years. I think all of them actually is increasing the overall Capex cycle growth momentum that we are seeing. But compared to the global, maybe as a amount of investment may look a little lower than what we'll probably see in the global market. But however, compared to most of the countries investment that they make, and India would stand out way ahead of others, given the fact that we have been quite aggressive in building the future by way of making huge investment. Unlike China, who has already made a huge investment in Capex, but now they have to get those assets sweat for them in order to increase the productivity of these assets to contribute to the overall economic growth. Therefore, I am quite bullish in terms of investment-led growth for India that we have seen in the last few years will continue to be there the next few years to come, or rather many years to come.
So what is your long-term outlook then on the markets, given the fact that we have been moving in one direction only? Is it going to be more of the same next year?
See, outlook for the Indian equity market will remain very, very promising, given the one fact that India will be one of the fastest growing economy in the world, and Indian corporates will continue to deliver growth in excess of the nominal GDP, plus about 5 to 6%, which essentially means the Indian corporates have got huge wherewithal to deliver more than 18% CAGR in terms of growth momentum. And that being the case, from equity market point of view, we must expect equity market to remain very, very promising. As it is, in the next few years, we will see the interest rate down cycle also will begin. Therefore, the cost of capital, I think, will come down. Therefore, it's going to be more favorable for the companies, so to speak, and reducing the cost of capital to build the business. So, in a holistic basis, if you look at it, Indian equity market will continue to be on the growth path. At the same time, as the economic growth keeps going up, naturally the market cap to GDP. But today we have a GDP of roughly about $4.5 trillion, and equity market cap is about 1.4 times of that. And as the GDP becomes $10 trillion economy, then naturally the equity market capitalization would either be at one time of the GDP, or it will be 1.3, 1.4 times the GDP. My own gut feeling is it will be somewhere around 1.2 to 1.3, given the fact that we are a fast-growing economy. Therefore, we must keep big faith on the equity market performance for the next 10 years to come.
Sure, and given that we're pretty much underway with the quarterly earnings season, have there been any pockets that have surprised you on the upside, or any earnings that you believe will continue to look promising down the line?
I think positive earnings surprises could come essentially consumer discretionary, consumer durable companies, given the fact that we expect consumption demand to pick up in days to come. And second, cyclical companies, especially cement and metal companies, right now they are going, the price pressures have been quite high. But as the economic activity starts picking up post-monsoon, we'll probably see positive surprises coming from the commodity cycles as well. And banking industries have been going through a last few quarters, have been going through a period of delinquencies rising, and therefore the provisioning rates have been going up. But as they start recovering some of the provisions they made, and there's high probability they may also start posing positive surprises in their quarterly in their annual earnings. But I think broadly, if one looks at it, I think earnings surprises would also come from IT companies, given the fact that interest rates coming down will have a direct correlation to the spending by companies in order to build their technology capability further. Therefore, IT companies would also become the beneficiary of this. Therefore, we can also expect positive surprises as we move forward in the next few years.
And as we're stepping into the new Samvat, Bala, I want to know which are the top sectors that you advise investors should be looking at.
So the way I see is consumer discretionary companies should be one of the beneficiary, given the expectation that consumption demand will pick up. And second, the housing sectors, the unrelated housing sectors, given the fact that housing as a sector continues to in great demand, given the fact that the buyers have been coming forth across the country on the basis of owning a house versus renting a house. So that's something would also lead to a significant pickup in the allied sectors related to the real estate sector. We'll see festive-led growth could also be reflecting on that. And not only we should look at the festive level growth, we should also look at agri output, and the country will be better than actually the last few years we have seen, given the fact that we had seen a good monsoon. Therefore, the rural economy-led growth should also come, which essentially would come from the consumer durable companies.
Well, that's quite interesting. Consumption is one of the top plays, and given that we have seen the FIIs remaining underinvested in the Indian equity markets, will that, do you think, be the trend going into the next year, or will we see a mix of DII and FII participation?
So as far as the market concern, I think demand supply I think should be more in favor of demand versus supply. Though the last few weeks we have seen demand and supply more or less coming equal, given the fact FIIs have been selling and DIIs have been buying. And also the way we have seen the trend in the last few years, domestic savings getting channelized in the equity capital market have been on the rise, and therefore the domestic pool of money coming into the market will continue with the rise. Therefore, the demand for buying companies will always be higher than what you have seen in the past. And FIIs also will probably create more demand, though they have been on the selling side to the extent the equal amount of supply is coming from selling from FIIs as well. My own assessment is as the interest rate starts coming down, the FIIs flow also would come. Therefore, there is high probability the year 2025 or maybe the next 1 year, FII flows and domestic flows both will actually drive the demand for companies. At the same time, the supply, as the economy starts growing and more companies will tap the Indian equity capital market. That has now been the new trend, and most of the lending banks also encourages companies to raise equity capital, which is again good to have from India point of view. Therefore, more and more companies will also come to raise the equity capital for the expansion purpose. Therefore, we should expect some kind of supply to go up. But net, if you look at the demand would be higher than the supply, supported by both the domestic institutional investors flows as well as reversal of flows coming from the overseas investors.
So Bala, tell us, what is the outlook when it comes to the banking sector? Do you prefer large cap private sector banks that people find a lot more comfort within, or do you believe that the PSU banks are going to shine?
I think the preference for equity, I think will remain. Of course, public sector, we must admit that they are becoming efficient. They have been the major contributor to the overall economic growth by way of increased participation in building the infrastructure. In railways, they have played a bigger role. Public sector banks are becoming more efficient. Therefore, there will always be a question mark in terms of what is the discount at which they should trade compared to private sectors. And private sector also is something they need to also, of course, catch up in the growing economy. in order to bring their own efficiency in the overall pie. Therefore, I would assume, I think the both public sector and private sectors will continue to be the recognition, and purely on the basis of the valuation they will be driven, rather than differentiating basis they are public sector, therefore I must be a discount and so on and so forth. Ultimately, as long as the earning comes, the efficiency getting reflected in the overall company performance, then market, I don't think it will differentiate between public versus private.
What about the IT sector? There's been so much emphasis on AI and digitization picking up. What are your long-term prospects on the IT space?
I think IT sectors, if you look at last few years, they have gone through a phase of consolidation. I think IT sectors have not delivered as per the general expectation of the market. Given the fact the change world, every company have to reinvent themselves. I think IT as a sectors, I think India being one of the large contributor to the global spending by way of providing service as well as the product. I think the change world as well, Indian IT companies will play a larger role, given the fact that skill set is something they need to reset, which in my own belief is large companies who have a longer term outlook for the business, they would continue to improve their skill set within the company. Therefore, they can participate in the new world change in the technology front. At the same time, I'm also expecting more spending will be announced by most of the companies in the world towards IT as interest rate starts coming down. Therefore, Indian IT companies, those who have been changing the business model to participate in the new change in technology world, I think they would be large beneficiaries. My own belief is Indian companies having seen cycles of multiple changes that we have seen in the IT technology world, and Indian companies will be in a position to deeply participate even the new world as well.
Right, and do you have any top stock recommendations as we're stepping into the new Samvat, or maybe top sectors that you'll be watching out for?
Not really. I think one should not look at Diwali recommendation as one. I think definitely the last few years, Diwali, if one looks at it, we have seen steady growth and the momentum continuing. My own belief is this year too, we will see the momentum to continue on overall basis. I think I continue to see a broader market participation as we move forward. I think earlier the question used to be there, single sector, single stocks. I think we'll move away from that. I think a broader market will continue to be the driver. My own belief is small and mid cap also will continue to be the larger driver of the Indian equity market, not just for the next 1 year, for years to come. Given the fact market will continue to widen and breadth and width will increase. So that's where I see it.
All right, Bala, but I'm not going to let you go that easy. We've got a quick rapid fire round, and we want to make sure that investors make the most of their portfolio and they can light it up this Samvat. So here's one word answers that I'd like from you. Let's begin. One word if you can describe the next Samvat.
Bullish.
Bullish, okay, I like that. What is going to be the top theme according to you in the next year?
Consumption thing.
Consumption, okay. And what about FIIs versus DIIs? Who's going to drive the markets in the new Samvat?
This year will be both.
And where are you finding comfort? Is it private banks or the PSU banks?
Both.
Does the year belong to large caps or mid caps?
It will be a large cap.
And finally, what is your advice for new investors this Samvat?
Stay invested, keep the fight on.
Thank you so much, Bala, for joining in. It's been a pleasure interacting with you, giving us all those pearls of wisdom as to where the stock markets are headed, and of course, your advice for equity investors. Here's hoping that Samvat 2081 brings a lot of dhamaka on the Lal Street.
Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.